So good morning, my millionaire family. Dexter Anderson here, and today, as promised, I will give you lesson number 1 on stocks. Right, Javon, thank you for sharing the additional public offering of a company listed, on the stock exchange, and it's an opportunity that you can buy shares. But most of us wanted to understand what was all of this information and how will it benefit me. So I'm going to do a 3-part. I hope I can fit enough information in 3 lessons. Javon will be assisting me as well in sessions. But here goes lesson number 1, stocks. We'll start with the definition of stock. Now, the definition here for stock, a stock are shares of units of equity, ownership interest in a corporation that exists as a financial asset, providing distribution of residual profit. Now, if you buy some stocks, for example, in this particular offering, you can purchase a minimum of 1,000 shares. When you purchase the 1,000 shares, you own that stock, right? So its shares are units of equity. So when you buy your minimum 1,000, right, that is your ownership or part ownership in the corporation. Now, what you're doing is you're converting your money to own a piece of a company, and the company won't pay you interest on your investment. They will pay you from the profits. All right, so I hope that definition was clear. So again, when you invest your money in the shares are really what the company is offering on its equity, which is it's offering value to the public to own part of the company. And when the company grows, you earn profit from your investment. So you own a part of the company and you're owning profit over time. Some key things to know or to consider when buying shares, or when buying or putting your money to be a part of a particular company, is the nature of the business. You wouldn't want to go into railroad development business today because that is redundant. So you have to consider the nature of the business. Is the business relevant today? You also want to look into your confidence in the business. When you assess the nature, evaluate the business, because remember, you're putting your money to be a partner or owner in the company. So you have to ask yourself, am I confident in this business? Will the business last long enough for me to actually profit from it? The last thing you look at, to consider when buying stocks is, and this is my personal opinion as to how I choose my stocks, the company's history. You look on the company's financials over its inception, operating years to present, and you see how it has been growing or declining, how it stood against situations and adverse changes in economy, and also how do they pay, right? Now that you've understood the definition and things to consider, let's look into the main things which are important to you, the one who is investing your money into buying stocks. First of all, at APO, you'll see this additional public offering. It's $2.4, which means that for every unit share, every micro, farm that you can own a piece of the business, you pay $2.4 for every unit share. For the business which is being considered, you can only buy a minimum of 1,000, which means that if you want to invest in this company, you can only buy 1,000, so you will have to come up with $2,400. When you pay $2,400, that money is no longer money. This money now turns to 1,000 shares. So you own 1,000 shares of a company. This company probably has a few billion shares. So you own 1,000 of a few billion shares. So you own a piece of the company. So you no longer have money. You traded your money to buy ownership. Remember, you can't pull the money out. You have to sell your shares because you've given your money to the company to buy a share in the company. So you are now owner of the corporation. Now, if you want to buy more than 1,000, you have to buy in blocks of 100. Remember, it's $2.4. So if you want to buy more, you have to pay $240 minimum each time to buy more and more share. So hopefully you understand that so far. So that's what it would cost you to enter into the business, $2,400 American dollars. And for every additional 100 share, you pay $240. Right? Now, here's something that I think will be important to cover in lesson 1. How do I determine if this business is profitable? Well, there are a lot of considerations, but you can get down to earning per share. Now, this company offers you $0.03 per share. Okay? Now remember, each share value, that's the amount of money you paid for one share, was $2.4. The company's history says that it's paying 0.03 cents per share, which means that this company is paying roughly 1.25% per share. Companies pay either quarterly, which is 4 times per year, or semi-annually, which is 2 times per year. Sometimes a company pay 1 times per year. Our company can also pay 0 times per year. There is no guarantee of the company to pay you anything, but most companies try to pay you quarterly, which is 4 times per year. Now, let's say I invested $24,000 in this company. If I invested $24,000 in this company, I own 10,000 shares, because remember, each share is $2.4. 2.4 divided by 24,000, that's 10,000 shares. Now, this company, remember, is paying, earnings per share 1.25% per share. So if they're paying 4%, 4 times per year, which is quarterly, you're going to earn 5% on your investment per year. If the company is paying 2 times per year, which is semi-annually, you're going to earn 2.5% on your investment per year. If the company is paying only 1 time for the year, you're going to earn 1.25% per year, and 0% if the company is not paying for the year. Now, what does this mean? This means that if this company is paying 4 times per year at 5% of your 24,000 investment, you are going to actually earn from that company a total of 1,200 Jamaican dollars. for that year. So it's not interest, it's actually profit from the company operation. You get an equal percentage based on the amount of shares you have, and you're going to earn 1,200 Jamaican dollars. If the company is paying 2 times per year, you earn for that year 600 Jamaican dollars. If the company is paying 1 times per year, right, you earn 300 Jamaican dollars for that year. Now you probably say, but this is not no money. Well, maybe if you look at it that way. Another way to look at it is that if the company is paying 4 times per year at 5%, in 20 years, you would have gotten back all of your investment, and then you are earning every year after, if the business lives for that long. So if the business lives for another 40 years, at the 20th year, you would have recovered all your investment, and you have earned, 20 more years. So you would have doubled your money in 40 years. If the business is paying 2 times per year, it is going to take you 40 years of allowing your share to be with the business, to break even, and you start earning after 40 years. So it'll take you 80 years to double your money. If the business is paying 1 times per year, it's going to take you 80 years to break even. Now, this is lesson number 1 on stock. You probably be thinking, is it a good thing to invest in stocks? Yes, it's a good thing to invest in stocks because it's an asset, but it does have its place. You have to understand, how shares work, how stocks works. There's a lot more information to it. It probably doesn't sound like a lot more to you, but it fits in your financial portfolio, because if you have money that you want to put in a company that you trust, that will grow and that will live for very, 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 very long, right, and also will increase in value, this is one way that you can buy some assets and add to your portfolio. I hope lesson number 1 was helpful. Thank you for watching.